time for the 360 round, all about Tesla. We got the latest earnings report. There are concerns about the margins that the company's making and a whole lot more to discuss. Hatem Dhiab's with us, Managing Partner, Gerber Kawasaki Wealth and Investment Management, and Steve Wesley, Founder, Managing Partner of the Wesley Group, who used to sit on the board of Tesla. Thank you both for being with us. So, Hatem, I'll start with you. And, I'd like to just first say, is this company a buy? Would you say buy the stock? It's at 220 today. Before we get into the nitty gritty and all the details, I just want people to know right away what your thoughts are. Would you buy the stock today at 220, Hatem?
If you believe in the long-term future of Tesla, absolutely. And I think they're going through a tough time right now with the Cybertruck ramp. But ultimately, what Tesla is trying to do is so revolutionary, it's so different from any other car company. And I think they will succeed. So you want to take opportunities like this when the stock is down and really, if you don't have a position, maybe take one.
Yeah. So what did you think about the report, Hatem? I mean, what jumped out at you? You said it's a tough time and it was somewhat baked in. Why?
Honestly, it was depressing. I think Elon sounded tired. He sounded deflated. There's a lot going on with the Cybertruck ramp. It sounds like, they're going through a tough time. I think he, maybe distracted a little bit about what's going on Twitter. And obviously geopolitically, there's a lot of things going on. So I think he's worried about interest rates and the economy is slowing down. So all that came out in the conference call. Elon is someone who wears his heart on his sleeve. He's not scripted. He goes in however he feels. You can hear it in the conference call, and that was yesterday.
Right. Okay. What did you think about this, Steve Wesley? First, tell me, do you think that Tesla's a buy at 220? And tell me what you thought about the report.
Look, long term, I think Tesla's absolutely a buy. No doubt they had a slow quarter in Q3, but people expected that. Tesla had been very forthcoming. They were going to slow down a lot of their facilities as they retooled to make them more efficient and also to give the Tesla Model 3 a much needed facelift with the new Highland coming out. But at the end of the day, I think they're going to come roaring back in Q4. What people don't realize is Tesla's taken the cost down 25% this year. That brings the Model 3 down to about $30,000 after rebate, $32,000 from the Model Y. I think they're going to come roaring back in Q4 with awfully big numbers. But long term, the reality is Tesla owns 50% of the U.S. market. They're selling more EVs than everybody else combined. And they're clearly number one globally. Tesla Model Y, largest selling car in the world, electric or gas. So I think they're pretty well positioned. The big question is, can they stay ahead of BYD? There's a clear number two challenger, and I think BYD is going to give them a run for the money. But long term, the whole world's going electric, and Tesla's the king of the hill.
Yeah, and there's an article here that even Tesla needs to tone down its EV ambitions. Elon Musk saying we need to make our products more affordable so people can buy them. Steve, is this a good thing here? Because you do expect record numbers for this company going forward in the fourth quarter, right?
Yeah, absolutely. Look, there's two things going on. Elon's absolutely right. He's playing the long game, and he's saying if we're going to be the dominant leader over time, and again, the Chinese are coming, lower cost models, he's got to keep an eye on cost, and I think they're doing a better job of that than anybody else. Again, no one has the advanced robotization of the assembly line that Tesla does. They're the clear leader in OTA software. So in terms of net profitability, they are number one in the world right after Porsche. So if they can keep that up, they're going to be in awfully good shape. Plus, they also have the Tesla Energy division, which is growing like crazy. That may turn out to be their secret weapon.
Yeah, and we want to talk about that, but we're seeing all the EV makers down today. In fact, with the revenue growth, it rose 9%. That was the slowest growth that we've seen for this company in more than 3 years, Hatem. And we know that, as Steve just mentioned, Porsche, I know BYD has been a big competitor, and many, many, many more. What are the expectations of Tesla too high now as the rest of the industry is playing some catch-up?
I don't think so. I think the macro environment is really something that every car company and EV company has to look at right now. With rates being this high, and Elon talked about this a lot, the affordability is a problem for any really car buyer, right? So slowing down there is going to be problematic for anyone who's trying to sell EVs. But what Steve said is absolutely right. Like, the adoption is going to continue to grow, and Tesla is a company that can actually control its margins. The more cars they make, the lower the cost of those cars become, and as a result, they're playing this game about reducing prices to find really the right pricing metric, and maybe that hurts the margins short term, but long term, they're just going to have more market share.
Yeah. What did you want to tell us about this Cybertruck? What did you think there, Hatem?
I think everyone was super excited about some new information about the Cybertruck, but that information wasn't good. They are having problems ramping up. Reminds me of 2015, 2016, where Elon had to sleep in the factory to make the Model 3. So I think that's where we are with the Cybertruck, unfortunately. But, you don't bet against Tesla. They're going to figure it out.
Right, and the delivery is scheduled for November 30th. That's not too far out. Tell us a little bit about the energy business. That delivered some good news, Steve.
Yeah, and here's the fascinating thing, because most people think, car company, energy company, how can this all be the same? Here are the facts. What they're selling here are power walls for people's homes, and then gigapacks for utilities. What a lot of people just don't think about, especially the auto analysts, is virtually every utility in the world is putting as much solar and wind up as possible. They need to store that energy when the sun's not shining, the wind's not blowing, and they're doing it increasingly through Tesla's gigapacks. So Tesla's energy division has grown from 3.6 billion last year to what appears to be something closer to 6.3 billion this year. They can continue that sort of growth. That really gives the company's numbers a boost, and they're getting high gross margins there. But ultimately, the big question here is, can Tesla continue to be a low-cost leader? And I think they're already making plans for the Tesla Model 2. I expect them to see a new model in the roughly $25,000 range come out within the next 2.5, 3 years. And that's something that they can sell globally. If Elon can execute on that vision, I don't think anybody's stopping him. Will there be bumps along the way, delays with the Cybertruck? Without a doubt. But if he executes like he is now, #1 in the world, every auto company going electric, they're in a pretty good place at this moment. And by the way, having $26 billion in the bank for growth doesn't hurt.
Yeah, understood. I think a lot of people agree. Hatem, you were talking about Elon Musk sounding, he's just a little down, or however you want to describe it. I mean, I'm reading about that throughout this morning. People are saying much of the same. But when you look at the things that are going well here, the power walls for the home, the giga packs for utilities, the superchargers, we've spoken about this recently, Hatem, Dhiab, but, the naysayers will say those superchargers are nothing. They're 1% or some sort of, I don't have the exact numbers, but stop talking about them almost.
Oh, that's just not true. I think if you've seen how many car companies are adopting the Tesla supercharger network, or at least trying to get into the supercharger network, simply because it's such a huge advantage for anybody who drives an EV. I've been driving a Tesla for 5 years, and having the ability to charge anywhere I go without even thinking about it is just amazing. So the competitive advantage of that supercharger network is huge. And I think once they open this network to other manufacturers, they can generate between $2 and $2.5 billion in additional revenue just from energy there. And most of which, by the way, is generated through solar. So I think the supercharger network is just simply underappreciated.
And look, I mean, everybody still says that Tesla could very well be a beneficiary of the strike that's going on with the UAW. In the meantime, we've seen a sell-off, 2-day sell-off, a week sell-off here. It's down 12% this week. Obviously, the worst couple of days here of the year for Tesla. But as you both noted, for the long term, you're both saying buy. So it gives you some opportunities to step in on a name like this if you want it for the long term. Great conversation. Thank you both. Hatem Dhiab, Gerber Kawasaki, Steve Wesley, the Wesley Group. Thank you both.